What's good, my people? So today we'll be talking about Nasdaq, and we'll be talking about the importance of the higher time frame bias. Most of the time, people mostly trade on the lower time frames, and if you want to be profitable, you'll want to consider the higher time frame bias. All in trading, my forex indices and everything, you will want to consider the higher time frame bias. So the higher time frame bias in terms of 1 hour, daily candles chart, and 4 hour candle chart. Those are the higher time frame bias. And as you can see on yesterday's trading, the higher time frame bias indicated that this market was a very nice bullish market, of which we can highlight them that here. Tuesday's trading was from there to here, and with the higher time frame bias, you will notice that the market was bullish, but it eventually retraced and closed here. So this will help you determine how to take your trade and determine the direction that you want to take your trade from. And when looking at here on the higher time frame, we are on a 1 hour time frame. Looking at here, you will notice that the market rallied down, took out this liquidity here, took out this liquidity here, this low, and started rallying higher. And on the 1 hour again, you will notice that there was a very nice market structure shift here, a very nice market structure shift here, which was another key factor indicating that the market is willing to go up. That's why I'm telling you that the higher time frame bias is very important when you want to trade. And my drill to liquidity yesterday was aiming at here, and a very nice TP2 here. I mostly take profits on the bodies of these candles mostly, so that's my style of trading. I don't know how you guys do, but that's how I usually take, and most of the time, always 80% of the time, it always reaches the TP on the bodies, but other times it takes out the highs, but most of the time it also reverses after reaching the body high of the candles and then goes to the opposite direction. And when you know the higher time frame bias, you will drop down to the lower time frames so that you can be able to enter and hold your trade to there. You will first start to notice these key points, which gives you the signal that the market is going in a certain direction. Talking about me, I will first identify on this 1 hour time frame. I will identify this black candle before this upward movement, this last black candle, followed by this green one, another black, then this green one. This black candle, I will categorize it as a very nice fair value, a very nice order block, of which it resisted the price from going down, and it is the last candle which took out this low. With that, when this order block is violated to the upside and this high is taken out, I will categorize it as a very nice market structure shift. And when 9:30 approaches, I will notice this order block here, which formed at 8 a.m. New York time. So we'll notice it, and this candle, the 9 a.m. New York session candle, took out these lows first before rallying up, since there was liquidity down here, relative equal lows. We can drop down to the lower time frame so that I can show you clearly. You will notice that these two candles here, these two lows, are relatively equal, and most of the time you will know that the market goes to seek liquidity and to take out stops where people have placed their stops, and this is a very likable place where people place their stops, since they categorize this as the support or resistance. So the markets first rallied down, took out the stops, then rallied higher to the upside. So you will want to enter when the market goes down, take out the stops. Yeah. So on this 15-minute time frame, you will notice that after it took out the stops, and this black candle first, you'll notice first this black candle, then this candle that took out these stops. This black candle will categorize it as a nice order block, of which you'll notice it was retested again here on this line here. The market rallied down, stopped at the midpoint of this order block, which was a nice indication that this was a very valid order block, and it was, you can put your stop loss there, since all the liquidity down here was already swept. And with that, you will just place your buy trade here, put your trade. While entering, you will want to first put your stop loss on the low of this candle here, this black candle, two black candles before this upward movement, to give yourself a nice space for the market to retrace from and go to your expected directions of profit. And you will want to take profit there. Since it's the high of this range here, you'll want to take profit there. And as you can see, it was a very nice 1-2-3 trade, of which you could have risked $443 to get 1,336 USDs. I have talked about the order blocks here. Let's talk about the order blocks here and the liquidity points, relative equal lows, and the market structure shifts, which were present on the 930 trade going to the silver bullet time frame, of which the market on the silver bullet, the market rallied higher and took out took out the liquidity that existed on the higher side of the chart. And with that, we can meet in the next video. Goodbye.